Time now to take a look at the markets, thanks to our partners Forsyth Barr. Zoe Wallace, investment advisor, is with us this morning. Zoe, good morning.
Good morning, Ryan.
Great to have you. So a lot going on in the US, as you know. We've been talking about this for a couple of weeks, but we've got the return from the shutdown. How's that impacting things?
We do indeed. Finally, the US government has reopened after its longest shutdown in history, in fact. So we are now going to start seeing some of the economic data out that markets have been really waiting for and operating in a bit of a vacuum of. So this week we do get the September payrolls data, but also the US Bureau of Statistics says we may never actually even get some of the October things like inflation reports and jobs reports. So as we go into the Fed meeting in December, they are still operating in a bit of a data vacuum, and that may be enough to cause them to leave interest rates on hold.
And we've got food exempt from tariffs. I mean, one day it's one thing, the next day it's another. Today it's beef and fruit, which we will benefit from most.
Yeah, look, I think the Trump administration have realised that consumers are starting to feel the side effects of higher prices for a lot of imported goods, including a range of food products, including beef, bananas, coffee being another one in the spotlight at the moment. So look, I think that'll be a net positive both for the US and for New Zealand exporters to the sector. However, the bigger driver has really been the fact that you've actually seen just beef shortages in the US, which have been driving prices up quite significantly as well. So these tariffs have come at a time when actually you've already got an acute supply shortage, and that's been really driving the demand for offshore exports.
Nvidia, we got a result out this week, obviously biggest company in the world by market cap, and leads all the, particularly the tech stocks over in the US. What are we expecting here?
Yeah, so look, Nvidia really is now viewed as the bellwether of sort of the AI boom. So looking to their results this week, we are very much expecting that the market will take that as a bit of a bellwether of how the AI industry as a whole is going. And as you alluded to, over the last few weeks, we've seen a little bit more skepticism come into play, perhaps around the AI sector and just how much money is going into these firms. And obviously that impacts Nvidia in terms of demand for chip products and just about, actually getting the return on the investment of the money being spent at the moment. So how much demand we're still seeing for Nvidia's products will definitely be quite a crucial point for markets this week.
And finally this morning, New Zealand reporting season is ramping up here. What's on the cards for the week ahead, Zoe?
Yep. Busy week local reporting season. So while we've been talking about offshore, it's actually really action-packed this week for local company names reporting, particularly in the sort of the property and the REIT sector. So some of those big names include Investor, Argosy. We've got Oceania Healthcare out later this week as well. Radius Care and Asset Plus and Goodman. So a big range of companies out. Look, we are starting to feel a bit more positive on the overall New Zealand market, and what we're seeing from companies to date is that we are signs that we are approaching the cyclical turning point we've been talking about for quite some time. The property sector has been doing particularly well already over the last 6 months, but we do expect there's a bit more tailwind and a bit more momentum to come through yet.